What's going on, my friends? Chris here. I want to bring you all an update today at Bitcoin. Right now, we're sitting at $16,963. We're down about 1%. What I want to do today was look at Bitcoin on the monthly time frame, which we're going to be on now, and work our way in through the weekly, the daily, the 4-hour, and the hour. I think that's going to give us a nice detailed picture of where we're at with Bitcoin right now. So if you guys like these quick updates, don't forget to like, subscribe, hit that notification bell. Let me know what you got going on today and what you're doing with Bitcoin. If you're waiting for some lower levels, what level you're looking for, I would love to hear it down low in the comments. So let's dig into this. So first of all, guys, this is going to be Bitcoin here, and this is going to be on the monthly time frame, so each candle is going to represent a month. And what you can see is we just had November's candle close. This was a bearish candle. Guys, you can see here, very strong to the downside. We ended up pushing as low as about $15,500. We ended up closing at about $17,161. So we did get bought up a little bit, but this is still a pretty bearish candle here, guys. You can see it was engulfing the previous candle. So a lot of power to the downside there. So what we're going to be looking for now on the monthly time frame is a candle close this month up above the previous close. So we want to see that momentum change. We want to start getting back to the upside here. But as you can see, guys, we're struggling with this area here. And this is going to be our 50-month moving average. And that's going to be in red. And that resistance area is going to be up around $22,830. So what's different is as we step back, as you can see, for the most part, we were trading up above this 50-month moving average for a long time. Just according to this chart here, this was back in 2019. We'd been trading up above this 50-month moving average, and we have lost it now. We have traded roughly about 1, 2, 3, 4. This could potentially be our 5th month trading below it. So it's of extreme importance for us to get back over top of that and turn it into support and try to get moving to the upside here, guys. Because right now, what this is looking like is we may have another flush to the downside, and the attractive areas that I've been looking at have been anywhere from, you can see these green support lines here, guys, from $12,500 all the way down to about $5,800. That's going to be the range. You can see this big block of green right in here. So these areas, if we get another flush to the downside, I think anywhere from that 12,000 down to around 6,000 or so could definitely be a possibility for us. And guys, when I talk about the $6,000 range, you can see in here, sometimes we can get these really long wicks down that get bought up. And sometimes putting limit orders down in that range, you can really get lucky because you get flushed down with one of these long wicks, your buy orders get triggered, and by the time you wake up in the morning or a few days go by, you get bought up a ton. And you can see on the monthly time frame what happened before here, ended up getting bought up almost 70% from where we wicked down to. So I don't think there's any harm in putting, buy orders down in some lower areas, even if we don't end up getting there. Because if we do get lucky and we get a long wick down there, many times you can get in a great position just right off the bat there. So that's going to be on the monthly time frame, guys. If we move into the weekly time frame and we take a look, we're trading below our 200-week moving average, which is going to be in white. And this has been for a long time, guys, that we've been trading below this now. And that's showing a lot of weakness. Because same deal, if we step back and we take a look, all the way from $33,000, $3,600, we've been trading up above this 200-week moving average. And now you can see it's acting as overhead resistance as well as this 50-week moving average. So a lot of work to do here from the bulls. If you feel like you have to pick the bottom right now, guys, I would be cautious and I would be careful. Because you can see this big void that we have here. If we do end up getting flushed, I would look for some of those lower levels around that $12,000 area. Now, if we get a move to the upside, I would say resistance, first major level we would deal with is going to be 19,238. If we can continue a little bit of a bounce here, but overall, guys, the trend is down. Lower high, so you can see our high, lower high, lower high, lower high, and lower lows coming in. So right now, no need to pick the bottom, in my opinion. If you're dollar cost averaging, do your thing. These are attractive areas. If we get into the one-day time frame, so even on the one-day, guys, still being dominated by this 50-day moving average and this 200-day moving average. We have not had a proper back test of this 200-day moving average since the 30th of March 2022. That's how weak we've been. So if you feel like you missed the bottom or anything, guys, don't feel like that. There's going to be plenty of time. Once the trend reverses as well, you'll have plenty of time to make nice positive trades to the upside once the trend changes back to the upside. Right now, we're in a monthly, weekly, and daily downtrend. And see a nice example here, guys, a potential resistance area of that 19,200 here. If we do get up a little bit farther and this move wants to keep going. If we get into our indicators, right now VWAP on the daily is going to be a positive 17.62. Money flow is going to be a -8. Relative strength is going to be at 47. Then if we take a look at our MACD, we did have a positive MACD cross to the upside there. We are positive about 178 points right now, and that's going to be on the 1-day time frame. If we get into the 4-hour, see if we're gaining a little bit of strength. So on the 4-hour time frame, guys, nice rejection here. This is a nice strong candle. You can see the bulls tried to push up to about that 17,300. Bears stepped in, and it was a big push to the downside, and it came on heavier volume. So I would anticipate more of a retracement. If we are going to get a bounce, potentially around that $16,565 could be an area, but I would still anticipate some more retracement with the type of candle we had on some heavier volume. Just be cautious in this range right here, because guys, still even on the 4-hour time frame, we have this 200 moving average on the 4-hour acting as resistance as well. If we get into the 1-hour time frame, so on the 1-hour time frame, we're trading up above our 50 and up above our 200. So we did have some good volume came in, which pushed us up above this 200 moving average, which is a start. It has to happen on the 1-hour, then the 4-hour, then the 12-hour, then the 1 day, the week, and you just work your way backwards. So it was a nice start on the 1-hour time frame, but you can see this big rejection here, this double top where we pushed up, came back down, bulls tried again, and then we had some big selling pressure coming back in. So if the bulls are going to step up, guys, we need to hold about $16,555 would be the area. In terms of overhead resistance, we would need to get over top of 17,316. So just want to give you a quick update, guys. Just be cautious out there. Be careful. We still may have another flush down. Take care. God bless.